Joining me in Amsterdam, Jason Feer from Poten Partners. Jason, thank you very much for your time. Let's talk LNG, your area. How do you see the market developing and where it's going in the future?
Well, I think one of the things that we're seeing is that a real transition from a long-term contract-oriented market, sort of point-to-point sales from producers to end users. And what we're seeing is a lot more participation of traders, a real shortening of contract terms, much greater flexibility, a lot of diversity in terms of how LNG is priced in those contracts. So a real transition from a very structured, long-term focused market to a much more commoditized market, focused more on price, more on sort of risk management and things like that.
So it's a fascinating way to see how it's going. I mean, just to put a couple of figures on it, you say from moving from long-term to short-term, what do you consider like a shorter-term contract?
Well, I mean, traditionally, the sort of baseline contract in LNG was a 20-year oil-linked contract, so priced against Brent typically. And what you're seeing now is contracts ranging, anywhere from sort of 2 to 20 years. But for example, in 2017, the average contract length that we saw was about 6 or 7 years. That ticked up a bit last year because of some long-term contracts in Mozambique that are going to sort of backstop financing of a new project. But I think long-term is increasingly more of a 10 to 15-year contract rather than a 20. So you're already seeing a sort of overall shortening and a lot more of the sort of 3 to 5 year contracts than you saw in the past.
And that is going to have a huge knock-on effect for the whole market and the way people either invest in it, they look at it, where those contracts are as well, I imagine.
Well, it's having an impact on financing because you've got to satisfy the banks that you're going to get paid, and these are capital intensive projects that get paid off over 15 years. So you've got to put together a project that's convincing to bankers, and that includes robust contracts. So that's having an impact. And you're also seeing a big boost in liquidity in spot markets and shorter term markets because people are going in and out of the market much faster than they used to, whereas you would sign a 20-year contract and that was your supply. And now even utilities in Asia are in the market much more frequently than they used to be.
So who's managing to make advantage of this? Is anyone?
Well, traders, the big pure traders, people like Glencore, Vitol, Gunvor, those people, have really taken a pretty significant position in the market over the past few years. They've actually started signing long-term supply agreements so that they can ensure they have access to LNG, which is something that's very new, really, over the past couple of years. A lot of the majors, people like Shell and Total, for example, sort of serve an intermediary function. So they buy on 20-year contracts and then they can chop that supply up into smaller pieces for 2 or 5 or 7 years for clients.
So wherever they feel that there's a market that they can send it to. I mean, it's really interesting seeing that as a dynamic market that will then move in a way that we don't normally see in the energy market.
Well, you see it in oil markets, for example. Yeah. So I mean, what you're seeing is this sort of evolution from a very staid, traditional, long-term oriented LNG market to a much more, classic or a much more typical commoditized energy market. It's not to say that LNG is going to become like oil. The infrastructure demands are pretty significant. The kit that you need to be in the market is very expensive.
Yeah.
So there'll be differences, and you'll still have a lot of utilities buying on a long-term basis, but you're definitely seeing the emergence of a pretty significant percentage of the market being much more short-term, much more commoditized.
Yeah, I mean, exactly. You can't build an LNG terminal overnight, for instance. I mean, it's it's a lot of investment. I mean, what do you see as the price for LNG? What do you see that doing?
Well, I think that's a big piece of the puzzle that we haven't really seen develop yet. You really don't have. You've only got really one global LNG benchmark. That's the JKM benchmark. That's an Asian price. And what you see in other markets is still a lot of pricing against Brent, a lot of pricing against European gas hubs, the U.S. Henry Hub gas price. So what you have is a very unconsolidated, a very fragmented pricing market. So I think one of the tools, one of the benefits of this evolution would be the emergence of more LNG benchmarks that would allow people to avoid that basis risk, where, for example, now if you're buying on Brent but selling on JKM, that's very disadvantageous. If you're on the other side of that trade, it's very good for you. But those are risks that are very hard to manage right now because of that fragmentation.
Who do you see as being maybe the big importers in the future and maybe the big exporters? How do you see that side of the market developing, who the big players will be?
Well, I think the big importers have become China. China was...
and that will continue, you think, with LNG?
Well, I think they're not going to grow nearly as fast. So you saw these huge increases over the past several years, 50%, 30% increases a year in imports. That's definitely going to slow down. You'll still see China importing, and they'll probably eventually overtake Japan as the largest importer. India's quite far back in terms of the league tables, but India's growing. Other sort of second-tier countries like Pakistan has become an important importer. Bangladesh will become. Southeast Asia. Those are all new areas that are going to grow quite quickly. And in terms of production, what you have is Russia emerging as a very strong producer. The United States, which went from being a net importer to being a significant exporter. So that's where you see some real growth. Mozambique is another interesting story where you'll see a lot of LNG production coming out of Mozambique over the next 5-6 years.
I just wonder how you think all the politics plays into this as well, when you are looking at what is turning is more of a commodities type market, that sort of short bursts, short contracts. You've now got the politics playing in.
You really do. I mean, it's interesting because the trade tensions between China and the United States. China recently, I guess yesterday, more than doubled the tariffs on U.S. LNG. So that's going to keep U.S. LNG out of China for the time being until that's resolved. You definitely have geopolitics in terms of Russian LNG going into Europe, going into the United States during the winter. So you definitely have, as the industry becomes larger and more interconnected, you definitely have global politics being more of a factor.
Yeah, it's something which we'll be looking at over the next few months, if not years. Jason, Thank you very much for speaking to us. Thank you.
My pleasure.